Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, September 15th, 2008. Well, the index is plunged today, folks, and I'm sure everyone's aware of it by now. I won't necessarily go over in depth too much what the markets did. Let's just suffice it to say it was bloody. Bloody Monday here, as the Lehman news from yesterday, AIG, Merrill Lynch, you name it out there, people were fleeing the financials, and I can't blame them one bit. The Dow was down 500 points, the Nasdaq down over 80, the S&P was down 59 points. We're talking about 4% to 5% on the Dow and S&P. Nasdaq was down slightly less, about 3.6%, and a bloodbath, folks. And I want to get into things, and we'll talk about what's going on while we look at the market. But any way you cut it, we all knew it was going to be disastrous last night, okay? Yesterday morning, we talked about in Friday's video the Lehman. Lehman was the key here. All right, they had talked about Friday and Thursday night that Lehman would announce something by Sunday evening before the Asian markets opened. That was the key. Were they going to find a deal? Were they not? Midday on Sunday, Barclays pulls out. Bank of America pretty much says no way. All of a sudden, things look bad, and bad they were. You basically saw here, folks, and this is choreographing play-by-play starting from yesterday, which is rare. But last night when the futures opened, and usually you have a couple hundred contracts on the futures trading every 20 minutes or so. It was huge. The volume was like the market was actually open, and it was unbelievable. So you saw the futures tanking last night. We knew the markets were going to open down about 300 points as of last night. That's what they did. They rallied a little during the day. You can see here, folks, that there was a bid that came in the market, and the market did get a bid. The Nasdaq at one point was only down about 19 points or so, but ultimately it just couldn't hold up, and you had AIG today. But let's start with yesterday. So Lehman, you know it's bad, right? Well, this is what happened. Merrill Lynch basically comes out, gets bought out, right, for $29 a share, and initially you see the futures spike up. This is after the futures are already down like 40 points, right? So the futures initially get a bid, but the problem is that the Fed here and all these deals, it's beginning to become like the boy that cried wolf here. All right, it's how many of these little deals are you going to try to do to just buoy the market up and get things not so bad? Because let's face it, folks. I mean, the Merrill deal, it looked like a little snow job here. I mean, the markets were basically getting hammered on Lehman, and they kind of throw this Merrill deal out there to try and appease the public and the investors and the trading public. But let's be honest, it doesn't solve the problem. In fact, I think it was probably one of the stupidest things for the company buying them to do. I mean, Lehman they could have got for probably $10 a share today. Merrill Lynch. Merrill Lynch was only up a penny today. That's after the announcement was made for a $29 buyout, and it closed at 17. Now, it's in stock, so stock is a BS way to buy anything out. You buy it out in stock, you're basically going to have the company trade with your stock because they're giving you a percentage of shares. I think it was 0.88 shares per Bank of America stock, BAC, I believe, anyways. So that was the way it went. So nonetheless, it was just, it's a screwy way to do it. And you can see Bank of America getting crushed today, down $7 to 26. AIG, though, was the story today, folks. AIG, we knew it was. Yesterday, they went to the Fed, and they said, we don't want to basically sell any of our assets. We don't want to take on any, debt here. We want the Fed to lend us money. They're not supposed to be able to borrow from that window that the Fed has. Whether or not they will allow it, who knows. AIG getting crushed today, $7.38 to $4 here. I mean, this is unbelievable. Here you're talking about just last Monday, a week ago from today, a $25 stock on AIG, now under $5. Blood in the streets, guys. Look at the volume here. About 740 million shares traded on AIG. I've never seen that much volume on that before, ever. So now you're talking about some major problems. And the problem is here with these financials, guys, you have to understand it's a snowball effect. You can't, just because a company may be solid now doesn't mean that if the stock goes down big, it's not going to become insolvent. And the problem here is that when you have the stocks get killed like this, the people that are actually lending money or have money in these banks or investment brokerages or investment banks start to pull it out. And there's a ratio. A bank is allowed to lend out a certain percentage, of quite a high percentage. For every dollar they have, they're allowed to lend out a certain percentage of money. So when people pull back, all of a sudden the bank gets in trouble because they've lent out all this money and so forth, and now it's all coming back to roost. So that's essentially what's going on there, guys, is that it's not that these necessarily, it's that the times are now causing. The Lehman issue was perpetuated by the stock going down to $3 to $4 a share. They just couldn't handle it. Too many people were pulling out, too many scared investors, people were going other places, and it just was a snowball effect. So, long story short, guys, ugly, ugly, ugly. The question is, it's not over yet, because Goldman Sachs, which got pummeled today, and I want to point out Goldman here quickly, it's just, there's so much to cover now today, it's tough. Look at this key support line, guys. All right, I want to point this out on Goldman. All right, here's Goldman's chart. You knew this was key support. It gapped lower, but the question was, we had talked about two to three videos ago, and you can go back and check. We had talked about the key level of 156 to 157 on Goldman Sachs as being the key number. All right, Friday it closed at 154. Look what happens today. I mean, these charts tell you what's going to happen. It's amazing. It's amazing. And did we necessarily know it was going to be a 500 point down? No, absolutely not. I mean, how do you know that? But the long story short here, folks, is the only guide you have in this market. Fundamentals do not work in a bear market, in a market like this. You can only go off technicals, buy for bounces, and scalp. And that's all you can really do, in my opinion. I mean, you can't really be holding here for anything significant because you look what happened today. Perfect example. So scalp trading off technical support levels, shorting off resistances, that's about all you could do. Now, let's go into this SPY because we got to get into some action here today. You're basically touched the July lows, and this is the key about this, all right? We had talked about the key support line right here, folks, and you can see how we bounced off of it. Let me just try and get that a little straighter here. Erase that. Now, the key support line prior to today's big drop was right here. All right, we opened really right on it. You can see how we touched it here, and it was ranging back to here. This was the next support line. We actually closed right on top of it. All right, the low here was something like 120 on the SPY, maybe right underneath that, somewhere right around there. Today's low, 119.89. So we basically touched the July lows. That's the support line now, folks. That's what we're holding on to. You break this, well, it's all off the table, and you have to start looking at lower moves. Could they break it a little bit and then rally it back up? Yes. Remember, we always talk about the propensity of traders and big players to push something a little below a low to take out the weak hands and then spike it back up. Now, whether or not they do that this time that's up in the air, obviously. But you have to go in expecting it. You don't want to see it break below and say, "Oh, I'm going to go short," and then them do that on you. You don't want to get caught off guard. That's my point here. So you want to see confirmation. We always talk about confirmation of every move, and as of now, we want to see if we break tomorrow, do we confirm it the day after, and so forth. Or today we're on support. You could bounce tomorrow, and we'll have to watch that. A lot going on tomorrow, and this is so crazy in this market. You have Goldman earnings tomorrow morning. If Goldman does well, it could really bounce the market, especially the financials. Okay, it's key, and you know that there's a lot of pressure on Goldman here to perform. Well, look at Goldman. Ugly breakdown. If it's not able to bounce, you got to be careful here. All right, if they don't come out with good earnings, it's going to be very scary. But again, Goldman earnings tomorrow. Then you have at 2:15 p.m. Eastern time, the Federal Reserve will release their statement. Now, all you can say here, guys, is the Fed's going to try to say something that's going to soothe the markets. All right, they're not going to come out and throw the markets under a bus because they do that. Well, then you're talking about another day like today. All right, and that's not what they're trying to do here. They want to keep a stable market. They'd like to get a bit under this market. So you have to anticipate that they'll probably say something at least to keep the markets neutral. Depending on how the markets take it is another story. But I'm sure that's their goal behind closed doors. Let's say something, whether it's a rate cut, maybe we'll throw out a quarter-point rate cut. That's all on the table. I think all stops are out of this market now, meaning that anything's on the table to be done by the Fed that they can do. They weren't willing to bail out Lehman, but now there's talk that New York may back AIG. There's no consistency here that either, and I think that bothers the market. How do you bail out Bear Stearns and do that kind of thing and take on all the risk when they got bought out, but then at the same time you throw Lehman under the bus, and now there's talk that they're going to take care of AIG. Where's the consistency here? Where does the market know whether or not they're going to do something? And that's what the market craves, all right? The market can get consistency. They know what's going to happen. You adjust accordingly, and you go on about your business. Here we got no clue. You got no clue, okay, guys? So keep an eye on that. Again, just touching on Goldman Sachs, you got earnings tomorrow, the Fed at 2:15 p.m. tomorrow. It's options expiration week. You guys know how we feel about options expiration week. We preached it for years in these videos here, over the last year and a half of these videos being on YouTube. It's going to be wild. There's going to be major swings options expiration week. They're going to push the market up. They're going to push it down. They're going to try to get all the weak hands to X out of the positions. so the large players can have their way. Now, a couple things to note. First of all, Google, not weak today. Only down 380 when the NASDAQ was down 81 points. That is something to watch once we finally stabilize in this market. That's definitely something to keep an eye on. Another stock, Amazon, only down 96 cents today. In a very weak NASDAQ. So there were a couple areas where there might be a little strength. Now, again, that could reverse tomorrow if we see another huge day, but right now, should we stabilize in the market, those are the areas you want to kind of take a look at, obviously. Let's take a look at the SPY again, guys. Just an ugly day here. And I want to just touch on one other thing that, I don't want to be preaching in this video or, saying anything crazy, but it blows my mind how these financial firms did not see this coming. Nick and I, my partner and I, who's created InTheMoneyStocks.com, you can go back to our first videos back in mid-2007 when the market was roaring, and we kept on cautioning about this. There probably wasn't a day or two, it wasn't a day between these videos where we didn't say something, guys, be careful, this is what we're setting up for, this is what we're setting up for. And for these financial firms to not see this, these CEOs getting paid millions and millions, it boggles my mind. That's my rant for today, guys. Be careful tomorrow. It's going to be wild with Goldman and the Fed. Have a wonderful evening. Be ready for the new website. Take care.